Hey everybody, how you doing? You have the fabulous foursome here, right?
I love that.
The VKG Real Estate team. This is actually the first video podcast that the four of us have done together, correct?
It is.
You know, and I think it's important that we get the four of us here today because a lot of our branding, at least through last year, was all VKG. And a lot of people are asking, well, you know, what's behind that logo or what's behind that brand? And really, at the end of the day, in my opinion, it's four of the best real estate agents and brokers in our valley. And so I want to spend a little bit of time. I'm going to hand it off to Mark so he can talk more about, you know, the team structure, our different pillars, and how we service our clients.
Yeah, thanks, David. You know, it's interesting, as you're saying, with you know, the messaging on that VKGRE. I mean, it goes VK Real Estate Group, then we get the G added in there, and now we got two other awesome people here with Aaron and Ben in the mix too. And I know last year, throughout that whole process, the last couple of years, you know, I get people coming to me and say, "Oh, Mark, are you retiring? You got all these better looking guys coming up, you know, to take the reins." I'm like, "No, we're still here." And to your point of what you're saying, you know, lead into what is this team all about? And I'll tell you, you and I were talking about this as we were looking to build a team. We wanted to build a team that really provides our clients that, you know, everything in real estate we can do for them, right? All things real estate. Yep. And that's the great thing that this team does. They've got an incredible mix of all the experience levels. You and I have been brokers for a long time. You know, I can make that segue more onto the investment side, wealth building throughout the entire nation while we're still selling homes and picking up those buyers. So really everything, that's what our team really has done. Yeah. When you and I kind of started out with this team, we said we don't want to have 10, 15 people running around, right? Yeah. What this group can do, and I concur with what you just said. I know I'm a little biased, but the four guys in this room right now are the best real estate agents in this area.
Yeah,
really
and it's a good feeling to believe and know in your heart that you feel you're the best option for every client out there. And I think that's one of the, you know, the great things about our team. It's like you said, from wealth building, commercial real estate, investment real estate, traditional buyers, sellers, and oh, by the way, you know, Mark has a property management company too. So really all things real estate, you know, we're able to take care of our clients' needs.
And ultimately, I think if you want to be one of the best real estate agents, you need to be part of something bigger than just yourself, right? Like Mark 100%. Is so good at this avenue, you're so good at this avenue, you're so good at this avenue. And, you know, we have a great team behind us as well, full of admins. And ultimately, if you want the best service and the best experience selling or buying a house.
Well, and the true opportunity we have there as us as professionals and our clients is, you know, our industry is set up to where you're an individual, you're an independent contractor. You're the one person show and you're wearing all the different hats, right? Well, we know you cannot be 100% effective in that type of environment. And what we bring to the table is the absolute opportunity that, listen, if I'm sick, I'm gone, I can count on either one of you guys to sit in front of one of my client and have the confidence that you're going to be able to take them down that path just as much as I would.
Which, by the way, Ben, I need you to do a listing appointment for me on Sunday because I'll be at the Dallas Niner game.
There you go.
We got the tickets.
Yeah, that current event, the Niners did make the playoffs. The Raiders made the playoffs.
Raiders did.
Yeah, and
we were at that game.
And by the time you guys watch this, both those teams will be out of the playoffs.
Oh, come on, David. Come on.
But yeah, so great way to kick off the new year. All four of us out here. You know, there's a couple of topics I know we wanted to talk about today. You know, all four of us have speculated on what we believe the market's going to do this year. But I read a great article in Fortune magazine today that basically what they did is they took 7 different leading economists throughout real estate, mortgage banking, and investments, and wanted to find out what they thought the market was going to do nationwide this year. And so I'm going to rattle off some stuff, and then I'll let you guys kind of chime in with your thoughts. So they polled Zillow. Well, I'll start with the first two, Zillow and Goldman Sachs. Both of those organizations believe that we're going to see over 13% increase in prices this year across the board.
And this is nationwide.
Nationwide, right? Mm-hmm. And we know that our market's a little unique, and we typically trend much higher than that. But that's what Zillow and Goldman Sachs are saying. Fannie Mae, Freddie Mac, a little more conservative, but they're still saying a 7 to 7.6% increase in prices. And then we get down to Redfin, 3%. And then finally, the only, you know, kind of bear in this is the Mortgage Bankers Association. They actually believe that the market's going to drop 2.5% this year nationwide. Now, even if it does drop 2.5%, I mean, by no means is that even a correction. And if it drops 2.5% this year, we're still up over 20% from pre-pandemic levels. Mm-hmm. You know, so what is that? I mean, that kind of falls in line with, I think, what we've been talking about. It's going to be a crazy year. You know, what are you thinking?
Yeah, you know, I find it 30 years in this business now. Every year we look at the analysis that comes out, right? All the analytics and I find that really there's no real true I think, believer in what could happen, or there's no, crystal ball, right? Yeah. But I will tell you, the ones that I count on most are the ones that are in the trenches every day, because we see it. Aaron had made a comment about, the news winds up kind of lagging a little bit, right? They're usually 3 months, 6 months behind of what we're seeing every single day.
Because they're based on sold data.
Exactly. Yeah. They're based off that old data. And then when you start talking on the national side or on the global side, that is so different than Silicon Valley. Silicon Valley, we have so many microeconomic climates, that really change. And if I was to predict, or I kind of stopped doing it, but if I was to predict, I don't see this market going up another 13%. I mean, I think it'll be very moderate, if anything, because with that low inventory that you said, where we're at, 350? I don't think you've thrown out that stat yet, right?
No, yeah. As of today, 353 single-family homes for sale from, and the entire county, right? Yeah. 2 million people from Gilroy to Palo Alto. 353 homes, 227 townhomes and condos, and only 31 duplex triplex.
But what I think is the craziest thing, before you jump in, is the fact that we've trended upwards so high for so long. The cost to own versus rent has just gotten so obscure.
Sure. Yeah. But I got to ask you, like right now today, what's the average amount of offers around a property when you guys represent a buyer?
In the last 45 to 60 days, I'd say 15 to 30.
Okay, and that's what's driving that value from that house that's probably worth 1.5 in real world, if there is a real world around here, to where it's getting driven up to $2 million.
But do you think people are making a last second ditch effort to jump in before interest rates go up?
I don't think our area right now is really driven that much by it. I think it's just simple supply and demand. People in our area have a certain pain threshold that is a little bit higher than the rest of the nation. So if we get a 0.5 point to 1 point increase, there's not, look at these buyers are coming in 10, 20, 30%. Sometimes we just had one that was 72% above the list price. Mm-hmm. So that tells me that they're not hitting, there are those buyers that are hitting that threshold of affordability when they're going out there. But honestly, those aren't the buyers that are winning the deal.
But I also think that stat is super skewed, right? Like a list price is nothing more than a strategic art. So when you say things that are 100%. Selling $1 million over list price, no, they're not selling $1 million. I think our team does a pretty fair job of pricing things pretty close to the true value.
But what's really interesting is that we are seeing homes that are selling $200,000 over what the house next door sold for 3 months ago.
Sure.
Yeah, we just talked about that.
Yeah. And so if you look at it that way, you're really looking at a percentage over, the last market high. It's not slowing down.
There was a and we'll see if he. So Paul, apologize if you're listening to this podcast, because Paul, one of our clients on Sage Creek that we're just putting on the market, he's a analysis or
data analyst.
There you go. Perfect. Thank you. For a lot of new construction developments, right? And he's part owner of that property in Sage Creek, and he was going through everything he does on a new development. He's pulling all these stats all over the place that he's throwing out there, justifying why he believes that house is worth over $3 million. Now, you guys know the house I'm talking about. And his stats are kind of showing, well, that's a good argument, over $3 million. I'm sitting there going, I think you're probably 2.5 to 2.6. So there's sometimes we get married into these analytics that start pulling out their unemployment, interest rates, all those different things. Yeah. And I don't necessarily think that's a true indicator of where the market's going to go. It's up to the buyer. In our area, Correct. It's emotions, and those buyers are just throwing out that Hail Mary pass.
And there's so many buyers, I feel like, who are out there right now who are just kind of sick of looking at this point because there hasn't been enough inventory. I was talking to you guys the other day. We went into the Leland School District, and at the time, there's only one house under $2 million. So if go there at night, 7 o'clock tour, there's 6 agents standing in the driveway waiting to get in, and it's like a carnival. You have everyone who's now, in each other's ear. What do you think it's going to go for? How much over you guys going to offer? And it's like, at the end of the day, I think it comes down sometimes to that one buyer who's just like, I'm done looking. This is all the money, and I'm going to close it, and we're going to be over this.
That is funny, though, when you look at that scenario, right? Because I'll guarantee you there are buyers in that mix, if not the buyer who got that property, who will believe all day long they overpaid for it.
Oh, yeah.
And maybe in today's market you can say that. Or like you get those buyers coming in and saying, I want the deal. You're not getting a deal today, but I'll tell you what, 7 to 10 years from now, it'll be the best deal ever that you could have got.
Well, so hyperlocal, talking about new construction, Lark right here in Los Gatos looks like they're selling pretty well.
Oh, yeah.
And
that's $2+ million for vertical construction.
Crazy, right?
Do you get the school?
That backs up to a freeway.
Backs up to the freeway.
That's right.
Some of them aren't even Los Gatos School District, just with the Los Gatos address.
Split, yeah. And I was just looking to see how many they sold, and they're almost sold out.
Yeah.
Well, so let me ask you this, Aaron and Ben, you guys deal with a lot of buyers. What is your advice to that buyer who's going to come to you saying, I want to buy a house today?
Well, it's interesting because there's two different ways you kind of explain to these buyers, and you have the analytical way where everyone wants to see comps for something. Like you said, like you can't show a comp, or you can show a comp for a house that sold, a couple months ago, 250 grand less than what you're going to offer now, just because of where the market's at. So it's more of kind of digging into the details, I think, of why we're going up. Nothing to do with comps, but where everyone else is in the market, kind of what the overall, instead of closing down a small little circle over property, why this whole area in general is the way it is. And I think it's more of just keeping people emotionally involved in it and not letting them fade away, because I think when they start fading, then the prices keep running up and they get carried away, and that's when you start to lose them.
This is probably one of the bullish markets we've ever seen.
Sure.
30 years.
Yeah,
I don't know how long you been doing this.
18
years. But I think it really comes down to the biggest question is why. Like, why do you want to buy a house right now? Does it make sense? Can we even get what you want for the price that you're going to have to pay?
As somebody who's bought a lot of homes in this area, if now's the time for you to buy the home, now you're going to buy the home. But you better be able to afford it. You
Correct.
better be able to get in that game, right? Every time my wife and I have decided to go buy a home, we've made the commitment to go and buy a home. Mm-hmm. Life still happens. People still needs that house over their head.
You have to be definitive.
Right. So what's their option? Now listen, somebody might hold off the upgrade purchase, but if I've been renting now for 8 months and I'm just getting sick and tired of being a renter and I want to go buy and I have the money to do it, I'm going to go do it.
There's money to be made in the market. Look at what you did. You bought, in my opinion, at the time, you thought, oh my God, I way overpaid. He told all of us, oh my God, what am I doing?
Right.
It was a unique property, but you had the opportunity to make it better. You put, $100,000, let's say, into it, and now it's worth probably close to $2 million.
Yeah, no, and at the end of the day, I think a good message, because back to Mark's question, what do you tell your buyers?
Right.
I know it sucks, but this is the market that we're in. I know 1.5 million sounds like a lot of money, right? But it's not in our valley, and you can't be picky, right? Because being picky or trying, I love when somebody walks in and says, well, yeah, I can offer 1.5, but it's not worth it to me. Well, the one you find that's going to be worth it to you is going to sell for $2 million.
Absolutely.
Right? So at some point, like Mark said, you have to make the decision that no matter what I'm going to buy, you have to realize most of these people, first-time home buyers, sorry, you can't be picky.
Mm-hmm. Right.
In a market where there's 300 homes for sale and there's 30 offers on every house, sorry, you can't be picky.
The house is worth what you're willing to pay.
Yeah, I always tell our buyers, make that list of the top 10 items, right? Mm-hmm. And no, you're never going to get 10. I don't care how much money you have. Right. You are never going to get all 10 of those. So if you get 6, 7 in a market like this, be happy with it, because it's going to be a move-up property for you anyways. It's not, even myself, I don't know how many times somebody will buy that, that's going to be the house for the rest of my years. And the next thing you know, they're selling to move someplace else.
Yep.
Yeah, I'm pretty thankful for the clients we have too, and I know everyone on this team is pretty aggressive and transparent with their clients. And I think the relationship that we keep having and growing with them, it's okay for us to be blunt and tell them those things, because they understand they're working with people who are in this market.
Well, yeah, and you don't want to waste their time.
Well, but some agents definitely do that. They'll sort of cupcake it and say and at the end of the day, you might just have to crack down and. It's just,
And that's what our job is, right? We're advisors to our clients. Mm-hmm. I had a client kind of right before pandemic kind of went crazy and everything. And the property, we were selling the property, happened to, we don't double into a lot of our own properties. We do on the team, but not individually. And my buyer comes in listings at like $1.5 million. And it's getting jacked up to like 1.8, 1.9, and buyer calls me directly and says, hey, I want to put an offer at 1.9 on this property. And because we want to make sure we're fully transparent with everybody, I told him, I said, listen, we did an appraisal on this property before we listed at 1.5 is what it came in at. I got to tell you, at 1.9, you're overpaying for this thing. And his response was, hey, I don't care what I got to pay for that property. I can afford it. To own a piece of gold in Silicon Valley, I'm okay with it.
Can't change
and
location.
now that property's probably worth $2.5 million.
Right.
But to your point, though, you always want to be transparent, right? Yeah. We're advisors, and you can't hold back. I see so many agents, who try to sugarcoat the situation, or they want to tell their client what they want to hear. We're doing them a disservice if that's.
You are a messenger. You do not create the prices in this valley.
No, but it's our job to deliver the right message, right? Yeah. And like Ben said, you can't sugarcoat it or cupcake it. The sooner you're upfront and honest with those clients, one, they're going to respect that, and two, you're going to get them to that end goal sooner.
And I like what you said about we're the messenger, because everyone thinks when we tell clients oh yeah, we know the other agent representing on the other side. Yeah, we have a good relationship with them. They think we can just give them that exact price or that exact house. And it's like, no, we can put you in the driver's seat, but you still have to make that decision on your own to either go up or pull back a little.
And I mean terms, contract. I mean things that can vary a little bit, but at the end of the day, for the most part in this valley, the highest price most likely going to get that
right now. Yeah.
I want to transition a little bit back to what you were saying about the different sources that were coming up, and you had everything from a 2.5% increase, was it, or was that a decrease?
Decrease. The Mortgage Bankers Association is forecasting
2.5% decrease, all the way up to a 13% increase
from Zillow
appreciation,
and Goldman Sachs,
right? And I find it interesting because I do believe that if you look at a national level, some of those stats are going to be in place. I mean, for instance, when we do our wealth building seminars and we identify our emerging markets, we're looking at those places that are kind of that halfway up on the hockey stick, right? Where even if like our market stalls out, those markets like Austin and Miami and stuff are still going to be going up, right? So I can see where, as a blended scenario, we might hit 13% nationwide. Our area might be that 2.5% step back, but then you got an area like Austin that's still going to be pumping out 13% appreciation.
Yeah, and kind of interesting follow-up to that. So from October of 2020 to October of 2021, nationwide was 19% appreciation. Yeah. And to put things in perspective, the year before the market crashed in 2007, that year prior was 14.1% nationwide appreciation.
Wow.
So kind of interesting to see the parallels. I do not believe we're going to be in that same scenario, just based on equity and the overall economy.
Well, come on, inflation.
Yeah, I mean they've just been pumping the market for so long.
Ben, didn't you tell me, or maybe it was Aaron, that one of your clients got approved at 3.8%?
Just over the so I mean,
which I know we say that to our older viewers, or listeners out there, that's going to be an incredible rate. But it's a 1% jump.
It's insane. And I mean, obviously it's still less than what it was pre-pandemic, but like such a big increase in, interest rates all of a sudden really scares people. And obviously this podcast is going to come out a little later than when it's going to happen. But I was talking to my lender today, Brian, and he was saying on Friday they're going to go up even higher. And he sent me this large spreadsheet. Yeah, my client went from a 3.2 to a 3.7 in 9 days.
Mm-hmm. Wow. Yeah, which just means, for most of our clients, not going to matter. First-time home buyers at the entry level, they're going to continue to get priced out of this market.
And our investor clients too. Yeah. For our investors, because those non-owner occupied properties are going to be.
This is great advice to let all buyers know right now. If you have an interest rate that you think you've locked in the past month, you need to follow up with your lender.
Yeah, I think to make it super simple for anyone that's watching is the difference between 3% and 4%. If you're approved for $1 million. Yep. You're not only approved for $900,000, right? It's about a 10% buyer decrease. So theoretically, if interest rates go from 3 to 4, which they're well on their way, how can the market? And they may hit 5 this year, according to several other places that I've read. How can the market in our area continue to go up 14% if rates are gonna? That's a 20% change in your.
I personally don't see it happening. And I know every year, for those of you that we've had this conversation, I don't see us having a huge increase like that. 13% appreciation. Here, are we actually going to make a prediction?
Mark's bold prediction.
There we go. But see, again, it's microclimate, right? I mean, Los Gatos is going to be different than East. We know that the further out you get from the nucleus areas, ground zero type of locations, those areas are going to get hit first, right? Like Tracy, Stockton, all those areas, even around us. Let's look at Gilroy, Morgan Hill. I mean, pandemic hit, and we were at a 20% increase from January 2020 till the end of the year down to Morgan Hill and Gilroy, right? I know the whole market went up, but that's because everybody felt commute was over, everyone's going back to remote work. All of a sudden now, 101 is just back to where it was pre-pandemic, and those prices have kind of stalled out, right?
Yeah, I mean they're still going up, But again, I wouldn't say that Hollister and Gilroy will correct as much. I'm sorry, Morgan Hill and Gilroy will correct as much as like a Hollister.
Sure,
right?
Because it's further out.
Because it's further south.
Supported by nothing. We talked about this before.
Yeah. It's funny. I'm gonna date myself here. In the old days, we used to always look at Santa Cruz County compared to Santa Clara County as a mile marker. And it was always that Santa Cruz in a upswing would see it 6 months earlier than Santa Clara County, and in a downswing you'd see it there. So that'd be what the indicators that we would look at. You'd see Gilroy, Morgan Hill, Santa Cruz County. If you saw that start dipping, then we were prepared for that happening in 6 months from now.
So let me ask you. You guys have been doing this way longer than us. 2009 happened. Yeah. Everywhere went way down.
Yeah.
I don't think we'll ever see that again. However, I think we're in a different situation because would you say that California and New York are probably the leading indicators coast to coast? Things happen here first, and then they trail over.
Yes.
Okay. So I think personally that things in Texas and Florida and Tennessee or wherever it may be are still relatively affordable. But if we see a correction here, it's not going to take effect there for the next 6 months to a
Absolutely.
year. So I could see, it's going to go up 18% or whatever we're saying throughout the nation. But here I expect Q2, Q3 to be a little bit slower. Properties may sit a little bit longer with interest rates raising. The tech stock I don't see continuing to grow as quick as it is, and we just may hit a little lull here.
I don't see our market. I do agree with you that this year we will see a little bit of a shift, but I don't think we're going to see until later in the year because inventory levels are so damn low.
What do you think healthy inventory levels are? Right now, single families
enough more than one house in the school district.
Historically, we used to say 3,000.
Right, that was it.
No.
3,000 houses on the market.
Yeah, that used to be a neutral market.
I haven't seen
that predates
in
Aaron.
7 years. I have not.
It'd be
seen
like
more
a candy
than
jar for my
800.
buyers.
Right. No, exactly. So I would think we would need to get to about 1,500 homes on the market for any type of slowdown.
fully agree.
I don't even
So
see.
do you guys agree that there was a correction of April of 2020 when COVID hit, everything happened? I saw it 5 to 10%.
From March to May. From March to May.
But
That
we
was
also
the
started
correction.
seeing the shift in fourth quarter 2019 before the pandemic hit, and we were already on a 10-year run because our cycles have always been 7 to 8 years.
Right.
And that's I always appreciate like the newer agents coming in because you guys haven't experienced one of those downturns.
I know.
Everything's been golden for
Yeah.
you guys.
And now
right?
everyone's getting their real estate license. Like newly licensed. I'm like, oh boy, you're in for it.
Yeah, right. But that's the best time to get in the business too. And a downward turn, man, it definitely teaches you the right.
But then
tools.
to Mark's point, at what point in the year do we see 1,500 homes on the market? Probably not till May or June, right? If that. If we're getting 20 to 30 offers on every home that comes on the market, we can't get homes on the market fast
It's
enough.
interesting though. Again, when you look at stats. You said there's 353 single-family homes on right now, but that's actually about a 14% increase week over week.
Yeah.
Because last week we only had 300 homes on the market, right? So it'll be interesting to see. I mean, if we see that type of stat again, where it's 10 to 15% each week, then of course we'll be getting back up.
January
there, but-
traditionally is the weirdest time.
Well, I mean, how many homes did we have on the market last January? January 2021.
It actually wasn't much higher than this. It was closer to 500. So
Okay.
so not much.
Right.
Remember how I said there's avenues that all of us are good at? This is the stat man.
Yeah.
Stat man. I just don't see how certain areas like Los Gatos, Lee area, Leland, how do they slow down? How does an area with only one house on the market right now slow down?
So
but if more houses pop, I feel like more people are just going to start going after them even quicker because now there's just
Well, let's take Los Gatos. There's 15 homes in Los Gatos.
11 homes.
11 homes.
In Los Gatos
6
schools.
homes under.
And if you say a healthy, you go down to this micro level. If you go down to healthy in Los Gatos, 80 to 90 homes on the market.
you can't even find a 4-bedroom home in Los Gatos under $3 million right now. Like what?
So you go from 11, you said, to 80 or 90.
Yeah.
I mean, so that's 9 times our current inventory.
Right.
Are we even going to get there this year?
That's what I'm saying. That's why I don't think it's going to happen second, third quarter. Unless, I mean, listen, if it does happen, that means we see a major increase in interest rates. Inflation's going to be real, and it is. It's already kicking our butts, right? But I don't see that. I don't see the market changing as much now in the next 2 to 3 months as I do in the next 6 to 9 months.
But to your guys' point, sure, $3 million to get Los Gatos high. You can rent a gorgeous home for $7,000 or $8,000. Your mortgage payment on $3 million, that's not $7,000 or $8,000.
No, it's double that.
So we are approaching a time, in my eyes, that I've never been through that's very unequal.
So,
but you have the appreciation.
I'm going to go back to the question I asked earlier. What is Aaron? How do you advise a buyer if they're coming to you saying, "I'm thinking about buying a home right now"?
It's going to be double my rent payment.
I mean, yeah, I would just literally ask, find out why, but if they can afford what they want, we do it. But I personally am not recommending anyone buy in this market that doesn't have instant upside, right? Like you get the location you want, you get the schools you want, you get the things that you cannot change. But if we can redo a kitchen for $60,000,
that instant upside doesn't necessarily have to be appreciation.
Correct.
Right.
Something that we buy for $2 million, the neighborhood supports 2.5. We put in a $60,000 kitchen, maybe do some paint and floors.
Sure.
Oh my God, abracadabra, your house is worth 2.3.
Or it's truly giving you that quality of life that you're looking for too.
Right.
Yeah.
Because you do not, what I don't want to see my clients, friends, anybody do is buy a house and not be able to go to the next step in their life because they bought a house here, the market corrects, and then you're stuck.
And you bring up a great point. Mark and I talked about this a week or two ago. If you are a homeowner right now who has a house that backs up to a freeway on a busy street on a corner, sell it now.
Absolutely.
Sell it now because buyers are desperate.
Yeah.
Right? Because you're right. Once a market slows down and then you have that busy corner house and there's 5 other houses for sale, you're screwed. But on the flip side of that, especially for the two of you that work with buyers day in, day out, now's the time where you got to pull them back from those houses.
Yeah.
Right? Hey, I know it's in the area you want, but what happens when there's 6 of these on the market and you got to sell yours?
And I think circling back to what was the list of the 10 items that we had, are we still hitting 7 or 8 of them, or are we
I
now
said
settling
6
for
or
3?
7. 3
Or
maybe.
1.
Right? Like
Right.
this
Well,
house
but-
is not the
okay,
right house.
To that point, though, I always want to make sure a buyer isn't going to be married to their home to where they're trapped in it, right? They got to get a buyer, especially with the younger buyers, right? You want to make sure that you got a home that you can expand with, right? That as your family grows, the home you buy today will at least support the next stage in your life if you can't sell it in 3 to 5 years and make any money to allow it to do what it needs
Because
to do.
you're going to be cash flow negative for the most part.
Well, right. They're going to be locked into that home. Correct. Yeah. It won't allow them to move up to that 3-bedroom or so. So, like, personally, I never advise my clients to buy a single bedroom home or condo.
1-bedroom condos.
Yeah, we dealt with that in Cupertino, the
Yeah.
hottest
Yeah,
market
right?
in the Bay Area, and we
How
couldn't
long
sell
did
one
that
bedroom
take?
condo
Yeah.
in 7 days.
Yeah.
Yeah.
Yeah. It's interesting. Yeah, I know when we first started, it was, the average time that somebody would buy a home and then turn it would be 3 to 5 years. First home buyers, 3 to 5. Now it's like 7 to 10.
Well, I was just going to bring that up. But my buyers, I have had a couple of them say, you think if I buy now, it would appreciate enough in 1 to 2 years where we can sell?
No.
It's like not
And
necessarily.
the other
Like,
thing
you
you gotta
need to be
remember-
willing to be in this 5+ years, especially,
And they're
right
already going
now.
to give up 6% because they got selling expenses, right? So I always tell everybody, listen, if you're coming out here to relocate and you got a 2-year contract, rent. Right? You don't want to get locked into that house, right? But if you're going to be here, 5+ years, or this is your home, go ahead and buy. We know long term, no matter what you pay for it today,
you're gonna
will
be
be
fine.
a great deal 7 years from now.
So, I do have one thing to say. I have a
Just
lot of
one?
things to
I was going to say,
one?
you're
Right
on
now.
a roll.
Or 1 left.
So, I don't know if you guys have noticed, but the condo townhouse market in 2018 has depreciated, and we are at equal to maybe 2 or 3% higher. Right? We sold it. We
That's
sold
not
the
a
property.
surprise. I mean,
Yeah,
But
because
the
of
condo
COVID.
market in 2018 was nuts, and the single family
Sure.
market here has appreciated way more than condo townhouse.
Well, yeah, and that's usually the way it works, right? Single family homes get for a lot of people. Single family homes, they're priced out of, so then they got to go to condos and townhomes, and then so that drove up those prices. And then what happened? Well, COVID hit. Nobody wanted to live in a condo or townhome. That further drove up single family homes, and now we're finally seeing that swing back to townhomes and condos because that's all people can
well, and
afford.
that's what was interesting to that comment of COVID, because COVID dropped condos. They lost 20% of their value. It was the only segment of our market that actually went backwards instead
Right.
of forwards.
But big time backwards.
Yeah, because
Yeah.
nobody wanted that communal living. But everything will hit that milestone, right? Where everybody's like, oh, wait a minute, look at them now. Now we can go buy that condo. Was it $800,000? Now it's $600,000
Yep.
bucks.
I mean, again, depending on where that condo is, there's a lack of condos. And
Yeah.
what happened the other day with the condo? It went 100 or 200 plus over asking.
Oh yeah, direct comparable 1.2 sold for 1.3. 36 offers.
So again, depending on what
On South San Jose.
neighborhood, what neighborhood, what school district,
But
like condos are going crazy.
I think what we really do miss in this market is the move up buyer, right? To move up from a Los Gatos townhouse to a Los Gatos single family is 1.5 to $3 million bucks. Really quick. Whereas you look at,
But we also have to realize
Arizona.
the individuals we're dealing with, right? I mean, our
guess.
individuals here have significant money that they're sitting on, or they've hit their IPOs over the last few years. And we're fortunate enough that we have clients that actually could make those moves, especially in an area like Los Gatos. I would agree with that, the buyer in Cambrian, right? The buyer in Cambrian probably can't go from their home that's worth $2 million to $3 million bucks right now because they do have that affordability issue. So,
and with COVID, everybody's spread out, which is the craziest part. Like things in Santa Teresa are 1.5 all day long. Right?
Wow.
We just sold the one on Madison.
more than that. I just
Yeah,
put an
more than
offer in
that.
for 1.8.
Yeah, you can see 2 with the zip code of 95123 or 95119.
Yeah. I never thought
Two-
those homes would
well,
make
come on,
$8
man.
million.
I go back and it's like Cambrian hit $1 million bucks. Are you kidding
So the
me?
guy who's
Come
been doing it
on.
for 30 years, we're like, why don't you own 798
Yeah,
houses?
no doubt, right? No doubt. Well, that's exactly why, I don't really deal with buyers. I'll let you guys do that because I, if we go back to 2008, you were talking about 2008, 2011, you go over there by Monterey Highway, those homes are at $185,000.
Yeah.
And what are they going for over in Seven Trees area?
Oh, there's
Over a million.
everything's $1 million above
$1 million in Seven Trees.
in the hood. Yeah.
Gray Ghost.
Yep,
All
yeah,
those,
all
all those
that.
streets, huh?
Uh-huh.
That's crazy. Yeah, that's nuts. And you're absolutely right. I made our clients a lot of money back then, and that's why we're kind of switching a little bit now, be able to focus on emerging markets, places we're getting invested in ourselves, and bringing you guys along for that too.
But I would say at the same time, I don't know if you're going to edit this part out now, but it's not bad to rent here in Silicon Valley and put your money in an emerging market to just get the ball rolling.
I think it's always great to have these conversations, so I don't think anything like that needs to be edited out. And that's a great thing about the four of us. It's all the different perspectives that we have and the different mix of clients that we have as well. So I can see where that Yeah, I mean, listen, I analyze that for my clients. I got clients right now that are our age, mine and David's age, and they're looking at that. They're saying, listen, I'm sitting on $3 million worth of equity on a home here in Los Gatos. My kid is moving out of the house. What if, we want to go rent up in Palo Alto for a while, but we take that money and go put it down in Austin? Mm-hmm. I mean, sometimes it makes sense to do that.
And sometimes selling doesn't make sense, right? Cash out, refinance, take 70%, and then you can put it in Austin. You can put it.
My only warning of that, right? The market does shift, and you never want to over leverage yourself. I love leverage all day long. Let my money work for itself. I don't like cash. Cash rots and just sits there. So
that's why Aaron spends it all.
Yeah, exactly. Yeah, the guy that doesn't own a house goes out and buys a $150,000 Porsche.
Let's edit that part. I do own a house.
Yeah, he does have a house in Discovery Bay.
That's true. It's we know that real estate's a marathon.
Sorry about my boss.
So again, the wonderful thing about what we do and the investment side of it is we look at everybody's individual situation. Everybody's individual situation is different,
and
right?
we are uniquely positioned to help any of our clients, whether the clients live here or out of state, and we can help them purchase here or out of state as well.
Right.
I mean, it really doesn't matter.
And then whoever's watching this, to be more relatable, if you don't have $3 million in equity and you have $50,000, there's plenty of places throughout California, throughout the nation, where we can help you partner
100%.
with.
I mean,
we're
putting deals together with groups who know each other or don't know each other or whatever, and they're coming in $50,000 to take down a 25% ownership of a property in Austin. We've been doing that now for 3 years. We've also participated in those too. And those homes that we were buying, the equity, went from a $200,000 equity to $350,000 equity.
And
so you're
cash
right.
flow positive the entire time.
Absolutely. The one thing though that I love the client who's they're kind of the blue collar individual, right? They've been, here they're making $80,000 to $150,000 a year, but they're sitting on so much equity. They're sitting on 2.5 equity in their property. That's the individual who's like, listen, you know what? Why don't we free up some of that equity and start doing some wealth building for you, right?
Because you just look at the money market the past year, we're up, like I think the S&P's up 30+%.
Oh yeah.
So whoever's staring at 10, 20, 30 million, whatever number in their checking account is losing this year just 30%. So buy something, sell something. I don't know. Do something. Don't just stare.
Just do something.
Don't
right?
stare at the damn money in the
Just
account.
call us. We'll help you out.
Yeah, for sure.
Well, we have team photos. I know we look cute.
Yeah, we're all
Our
dressed
hair.
up today. Because the worst thing a real estate agent can do is use the same headshot from 20 years ago, right?
Right, exactly.
So, all right, well, hey.
But you know what? Before we end this, and
Yeah.
we'll edit this however you guys want. But when we talk about our team and what we did to come together and everything, I want to give us props that we are not only the number one team within our office, right, but in the area. I mean, that we were able to come together. I think we did $180 million in production last year, helped over 104, or we're part of 104 transactions. So, if you guys want to give us a call, sit down, we can definitely take care of you in any of those arenas. And I want to thank you guys for the growth and support that you've provided me this last year and moving forward.
Yeah, it's been amazing. So we look forward to hearing from you, speaking with you.
Yeah, and thanks for letting us rattle on. I hope you guys got something good out of this, and we'll see you next time.
Take care.
See you.